If you're considering putting an ADU on your property but are finding the financing options are just overwhelming, you're in the right place. In today's video, we're going to go through some of the ways you can finance your ADU. Hi everyone, welcome back to the channel. If you're new here, my name is Erin and I'm a real estate agent that's passionate about affordable and alternative housing like ADUs and tiny homes. This channel was created for homeowners and real estate investors for me to be able to share everything I'm learning about ADUs and tiny homes. Today we're diving into a very important topic, and that's accessory dwelling unit financing or ADU financing. Stick around to the end. I'm going to share with you a newer way that people are financing their ADU projects without having to use the equity in their main home or even having to pay a monthly payment on the amount they borrow. There are all sorts of ways to add an ADU to your property, but they all have one thing in common, and that's the money part. You will need money to build the project. This typically means you're going to be borrowing it from someone else. So let's start with a disclaimer, because this is not financial advice and I am not a lender. I am a real estate agent licensed in the state of Louisiana. I work with homeowners and real estate investors. The information I'm going to share with you has been combined from several different things that I've read, and I'm going to link to those in the description. The main document comes from the Casita Coalition. I want everyone to know, if you're watching this video, always consult with a lender that actually specializes in ADUs. So in the video, we're not going to cover every topic in depth. We are going to give you a nice overview of the different ways you can fund your project. Each of the topics that we're going to cover today is going to have its own regulations and criteria, and it may not actually apply to all the different types of ADUs you build, like a garage conversion versus a detached ADU in your backyard. The things like the down payment, the interest rate, the terms, they all could differ. So you definitely want to get clarity and get those things in writing and ask questions from the lender that you're getting the money from. Before we get started, make sure you check the description. I do put information, any links and resources for the information of today's video down below so you can learn more. So let's go over the different types of financing for ADUs that we're going to talk about in this video. First of all, the HELOC, home equity line of credit. There's also a cash out refinance, a construction loan, a government grant or similar program, special renovation loan that may come from the VA, FHA, could be from Fannie Mae, Freddie Mac. And we're also going to cover the last one that's newer, called the shared appreciation or shared equity agreement. Some people are calling this the home equity investment. So as you can see in this example, real quick, the amount of equity and also the amount of income that the individual has that's building the project is going to really determine which of these finance products you're going to be able to use and which will be the best for your project. So ADU financing is impacted by several things. Most of the products for ADU finance are going to require you to actually refinance your main property. Things like the cost, the interest rate, the terms, they're going to differ, so it's important to learn more about those pieces. Each product may or may not require you to borrow against your current equity or even the future equity of your property after you add that ADU. Also, the type of ADU that you're actually putting on your property will determine which of these products that you can qualify for. Some of the products could include the anticipated rental income that you would get from this ADU. Always consult a specialized lender. There are lenders that focus primarily on the ADU market, and so they're going to have a ton of knowledge versus possibly a lender that deals in lots and lots of different mortgages besides ADU finance. Now let's quickly go through the factors that actually impact your ADU financing that's related to the person. Things like your location, your credit score, the amount of cash you have available, any existing debt, any existing equity in your home, and then of course, if there's a value add to your property from adding that ADU. Those are all criteria that could impact the financing that you qualify for. So let's get into the financing products. First is going to be that HELOC, home equity line of credit. And some people compare it to a credit card where you're going to have a max that you can borrow. and you use what you need when you need it until you get that max. And just like a credit card, you're going to have a monthly payment that's going to be associated and have its own interest rate. Now, this is going to be separate from your mortgage, but it is going to be based on the equity that you have in your home. So a lender is going to tell you how much you can borrow, how much of the equity based on the numbers, and then you're going to have that amount that you can actually utilize for your project. A lot of people like a HELOC because you can borrow the money as you need it and only pay the interest on the money that you've used. Some of the things to consider with a HELOC is that it could be a variable rate interest, and so you want to make sure you get clarity on that piece. The HELOC is going to have its own payment from your mortgage, and so if you don't pay that HELOC, they could foreclose on your property. The second product I want to talk about is the cash out refinance or cash out refi. This is when you go to a lender and actually borrow a higher amount than what you have borrowed right now if you have a mortgage at all. And so if you're borrowing more, there's going to be a difference in equity that they're going to let you utilize. And you can utilize that for your ADU project. Cash out refi, people like this because you're going to have one monthly mortgage. You don't have a first mortgage and a second like the HELOC. Typically have a fixed interest rate, which hopefully is low. With a cash out refi though, you are going to have a higher monthly payment. So if your mortgage was, a certain amount and then you borrow more, you're going to have a higher mortgage. There are going to be some closing costs that are going to be associated with this type of loan. So be sure to get clarity on that. One thing about a cash out refi is once you use the money that they tell you can borrow, that's it. They're not giving you any more. And so sometimes people that do a cash out refi and run out of money toward the end may blend one of the other products to finish their project. An ADU construction loan is one that is a short term for that construction period that should use the after value of your property with the addition of that ADU. And people like this construction loan because it's usually interest free during that construction period. Some people use the construction loan because they don't have a lot of equity in their home to utilize one of the other products. Some of the cons, it may have a higher interest rate. There could be what some people consider a complex approval process or a complex process through the construction as far as turning in receipts, and it'll also give you guidelines on the vendors or builders that you can use. So stuff like that is very important to get clarity on with your lender. Now, if you're lucky enough to have some type of grant program from the government in your area, this is sometimes free monies. Typically, you don't have to repay it, and it's specifically for your project. So you are going to see with these grant programs, there's going to be a limited pool of money. And so once it's gone, it's gone. And it's typically got some type of income criteria for the person borrowing it. So it could be for lower income or middle income persons. So you may not be able to use one of these programs or grants if you're over that income threshold. Typically, the grant programs have pretty strict criteria, and so there's usually a lot of paperwork and a lot of red tape. But if you can get through it, it's really, really beneficial. Now, some people are actually able to utilize some of the renovation loans that you might get from the VA, FHA, people like Fannie Mae, Freddie Mac. You may have heard them referred to as the 203K or the home style loan. They've got a couple different names depending on what agency is offering it. What's great about using one of the renovation loans, like a 203K, is that there's usually favorable terms and interest rates. You want to make sure, though, if there's fixed or variable interest rates. Like any government type product, there is going to be some eligibility and specific criteria to qualify to be able to use one of those resources. Now, for the newest way to finance your ADU, and this is pretty much grown or been birthed out of the development and interest and movement in the ADU market and all this reform that the states are having at the federal level and the state level. The shared appreciation or shared equity agreement, what some people call the home equity investment, is one of the newer players that people are utilizing. And it is going to be from a private company. And so they're going to have the ability to set all their terms and criteria for eligibility And from what I've seen, it's been a term of about 10 to 30 years, so not too totally different than a regular mortgage that you would get from any lender. And how these shared equity agreements work is that the company that's loaning you the money will share in a piece or a piece of equity appreciation of your property at a certain term, let's say for 10 years, or before if you sell the property. At the end of the agreement, or when you sell the property, is when you actually pay back the monies that you borrowed, plus the amount of appreciation that's specified in your agreement. What's great about this product is there's no monthly notes that you have to pay, and it doesn't use your current equity in your home. And so some people consider this to be a debt-free financing. The shared appreciation agreement can be a viable option if you lack a lot of equity or even cash up front to fund your project. One of the things that you want to consider is that at the end of the term or when you sell, you are going to have that balloon note. You are going to have to pay it. Now, this product is based on location. It's not in every market yet. You are going to see it in the markets where we are having a lot of ADU movement and development. And another piece you want to know is that if you decide to terminate your agreement with them, it could be costly. So make sure you read all the fine print, get all the specifics, get it in writing, even possibly consult an attorney so that you know clearly what you're getting into. Now I want to show you an example of how this shared appreciation agreement would look in real life. And this example is based on the document from the Casita Coalition, which is linked in the description below.
Let's look at an example of using the home equity investment to fund your ADU project. This is not financial advice. I just want to remind you of that. The background of this example is that a homeowner uses the home equity investment, the HEI, to fund their ADU project. The main home, the primary home, is worth $1 million. The homeowner borrows $100,000, and that's to complete the ADU project. The HEI is in exchange for 25% of the future equity, and the term of the HEI is due in those 10 years. Now, the homeowner is actually going to be able to rent the ADU structure out for $1,500 per month, and this is going to be the net number that is after any type of expenses are paid. So let's work with these numbers. In the example, we've got the home value, $1 million. The cost of the ADU that they're borrowing is $100,000. And then the homeowner is going to give up 25% of the future equity in 10 years. So 10 years occurs. The homeowner is now due to pay back the funds that they borrowed for the ADU project. The home's worth $2 million now. That's $1 million in equity that the home actually has increased. So the homeowner owes 25% of that number. It's $250,000. So what does the homeowner have to pay back? Well, they've got to pay the $100,000 that they originally borrowed for the ADU, and then they also owe that 25% of equity, which was the $250,000, for a total of $350,000. Now, before you start focusing on that $350,000 number, remember the homeowner earned rent, and he earned $1,500 a month, so that's $18,000 a year. 10 years, that's $180,000 in rent that this ADU was able to earn. So if we look at the numbers again, go back to the example, still got the total, $350,000 total repayment. But if you take off the rent earned, $180,000, you're left with $170,000 as the net cost of this structure. And remember, for the HEI, no payment is due during those 10-year period. So you don't have any type of interest or house note or mortgage note to pay. You owe at the end of that term unless you sell it for some reason prior. So you can see how using the HEI to fund your project is a really, really interesting example of, one of those ways that has been created with just the demand of the ADUs in general.
So that was a lot. We talked about several different ways to fund your ADU project. The things you want to remember is you have to assess your financial picture. You also want to assess your long-term goals and your short-term goals. Please make sure that you always consult with a financial advisor or one of these specialized lenders that deal in ADUs. Always check with different lenders because you want to really compare the rates and the terms of what they're offering. I hope you're as excited as I am because financing your ADU is a huge step, but armed with the right information, you can make a well-informed decision. I hope you enjoyed this video. If you found it helpful, please like and subscribe. Please also leave any questions or comments or any video ideas in the comments below. I love to hear from you. I wish you good luck on your ADU journey and see you in the next video.